Hello, this is Mike Swanson. I run the website WallStreetWindow.com, and the odds are that you're watching this video because you received an email from me telling you that it's now available for you. And I want to talk about a trade I put on a few hours ago. This is April the 26th, Monday. It's after the market closed, but I bought an exchange traded fund for a trade I think could result in a 60% return, not overnight in this trade, but maybe in 12 months, which is a big play if it happens. But to explain the thinking behind it, I'm going to refer back to this classic trading book, Reminiscences of a Stock Operator. I talked about it in the last video I did a week ago. This book is now 100 years old, but when I started trading in the 1990s, it was considered must reading for people on Wall Street, on trading floors. The top firms would recommend that their traders read it, and it would regularly be on the top 10 must-read lists for individual traders getting involved in trading for the very first time. Now, in 2021, though, people, I fear, that are getting new into the market haven't heard of the book because it doesn't have anything to do with crypto. It doesn't promise instant riches. So it's not really in the spirit of the times that we're in, where everyone there's so many millions of people have gotten into the markets for the first time and see it as a quick, rich opportunity. But if you go back and look at the classics of trading, that's really not what success is about. It's about understanding how markets work and using trading tactics that are right for whatever it is you're trading. There's times when you want to be a buy and hold person, when you got an opportunity to get in. We saw such a time last year in April, and other times when more short-term trades make quite a bit of sense. But one of the lessons in this book that has to do with the trade I'm going to show you in a few moments is, again, this book is 100 years old, and he talks about how there can be a group of stocks that tend to trade together. In fact, that's typically what they do. So when he would think about investing in a sector in the market, he wouldn't think about it as one stock to buy, but as a group of stocks to buy. And if the group did bad, then you can expect pretty much, if a stock is defying the underperformance of the others, that would eventually change. And at the same time, if a group has been going up month after month after month, and one stock isn't doing as well as the group as a whole, that could be a sign that there's something wrong with the company. And these were tells that he would pick up on to sometimes short a stock that wasn't acting right, or if there was a pack and a group that was starting to move and one stock hadn't yet moved, he'd climb on that one. And if it started to go up, he knew he hit his trade right. If it didn't go up, he'd give it some time. And then if the rally really matured, he would get out. But he'd use that as a good entry point for his trades. And that's basically what I did today. So there are a lot of things going on in the financial markets. It's not just about the Dow. It's not just about the NASDAQ. If you've been paying attention to my blog posts, then you know that commodities are taking off. And we have seen some pretty amazing moves in just the past 2 months in some individual commodities. So let me share my screen with you so you can see exactly what I'm talking about here. This is the price of corn futures, and corn futures 2-3 days ago last week on I think it was Thursday, went up so much that the exchanges halted trading. They went limit up, exploded in value. But the funny thing is, this happened in March. They went limit up when corn blasted through the $17.50 levels. And so we've gone limit up twice. That's how powerful the buying momentum is in corn futures. And corn isn't the only commodity going up. There's a broad-based commodity ETF that I own that soared once again today. The Wisdom Tree Continuous Commodity Index just made a new 52-week high, up 1.27%. Well, saying it soared might be an exaggeration, but consider where it was in May at 1450. So this is a substantial move, and it's happening because many of the commodities themselves individually are going up, thereby pushing up ETFs like this. But the agriculture commodity ETF is going up even bigger than this one, which I got a core investment position in. So you can see today it went up 2%, and it's gone from below 13 to basically 2 penny close below $18.60. This is a secular bottom in commodities that was made last year after the stock market crashed, after the shutdowns, secular lows to end what had been a basically over 6-year bear market in agriculture commodities. So we're in now a cyclical bull market, and that's why the momentum is shifting to the upside. Another commodity that is taking off this past couple of days is wheat, and wheat is helping to drive this index up too. So you can look across the board at the commodity complex now and see some commodities completely taking off. Frankly, at this point, I would not buy corn futures or the ETF that tracks them because it's runaway. There's no real entry point in it right now. But there isn't something else that I bought today, and that is an ETF for coffee futures. So let me show you the chart that we're looking at when it comes to coffee futures. You can see a base right at the 140 level. We closed at 142 today on this futures contract. So this has all the makings of a breakout, and I'm confident about it because it's what's going on in the entire group. And this hasn't gone up yet as quickly as corn, as quickly as wheat, as quickly as the DBA ETF, but it's likely to follow suit and break, it's closed above this level. So the potential for a really big move is here. What kind of move am I targeting? We're looking at a 7-year chart. Let's go back 20 years we can see resistance is really basically at 180 and then at 220. So I think we can target a minimum into that range, probably 220 in 1 to 2 years from now. That might sound like a long time, but we're talking about pretty substantial percentage gain returns. And if we just get up to 180 from here, that's a nice percentage move there. And that can be done before the end of this year, or really even by Labor Day, because the momentum is there in agriculture commodities. And remember, the concept is that when a group moves together up, things that they don't all move exactly the same every single day. So when you see a group get bullish, there'll be a few stocks or things such as coffee here that aren't going up as fast as the rest of the group at first, and then money can shift into them, or momentum can shift into them, and so forth. So I think that's what we can see with coffee. It's why I bought an ETF that tracks coffee futures. That ETF is JO. So it's going to be an interesting trade, I think, to see what this does over the next couple of weeks, the next couple of months. Wednesday, we got a Federal Reserve meeting that can often provides volatility to the U.S. stock market and sometimes even to gold. Expect the Fed to be just like they were last time, very dovish, saying they're not going to do anything, even saying they don't care. At least it's what they said last time. The CPI for inflation came out at 2.6%, and they said, we don't care about that. So we're going to let rates stay low until inflation really gets big. And frankly, these commodity prices are forecasting that inflation is coming, but not yet here big enough to make most people pay any attention to what's going on. But I'm here to point out to you what's going on in markets you may not be following, because no one on Twitter is talking about coffee or corn. There are no Robinhood traders, but that are in these ETFs. They can't make the top 100 list, or probably not even the top 1,000 list. So I got to be the one that's there. I get in early in opportunities before they make that top 100 list on Robinhood. That's my game plan and what I strive to do and help you to do too. So if you're not on my free email list, you need to subscribe. Click the link associated with this video. Get on that list. And if you're just randomly watching this on YouTube, click the subscribe button with this YouTube video. Then click the bell so YouTube will send you an alert as soon as the next video is posted up for you to watch. So you can get all my or some of my ideas that I put on YouTube. I don't put all my ideas on YouTube at all, but it's a different kind of medium, of emails and blog posts. You can be quick, right to the point. YouTube's not really about that. YouTube's about explaining things, breaking things down. It's just different. So you want to get everything I got, get on the email list, do that, and I'll be talking with you later on.